Hey there, welcome to another episode of the AI Edge podcast. We are here to help marketing professionals stay on top of all of the AI news in the industry and what it means for our space. So we're here with another great guest this week, David Danziger. So David, do you want to introduce yourself to the listeners?
Yeah, happy to. Thanks, Shiv. I'm David Danziger. I'm the Senior Vice President of Partnerships at Distillery, which is one of the leading targeting companies for advertising, and really excited to be here.
Awesome. And you are an esteemed U of Digital expert. You are a former trade desker and live ramper. I don't know if those are the right ways to talk about employees of those companies.
Yeah, my favorite description of the sort of nouns for people at a company. I came to LiveRamp via Habu, and Habu people were Haboosters, which I think that's my, TTDer sounds cool. LiveRamper, those are all good. Habooster, I always thought was awesome. Distiller sounds good too. Distiller is fun. Distiller is good.
Yeah, it's like, oh, you must like whiskey. I was at the Yahoo happy hour at the Possible conference last week, and I was like, wait, what are you guys? Like, what do you call yourselves? And they're like, oh, we're Yahoos.
Yahoos. Yeah.
Like, oh, okay. You're a bunch of Yahoos. Also, we have another guest on the podcast this week. His name's Myles Younger. Hey, Myles.
Hello. Hey, David.
Hey, Myles.
Okay, let's get into it. So, top story of the week. This one's really kind of interesting because I don't think this is actually big news in the sense that there's not a lot of like substantive information in the article, which the article is basically a massive expose in the New York Times about how digital advertising, which they claim was a boring industry because it was just getting boring, which, wow. Okay, that's fine. That's fine. Like, New York Times thought digital advertising was a boring industry. But now it's becoming exciting per the New York Times because of AI. And the reason it's becoming exciting is because all of a sudden AI is being used to do all of these fascinating things with advertising, like better planning and strategy, better activation, better creative production. And the biggest beneficiaries of all of this exciting new AI technology are Meta and Google. And their revenue is skyrocketing. They actually both announced earnings this past week. Both were up crazy growth numbers for companies that are already so big. I think Google was up 17% year over year, which is just insane given how much revenue they have. I think Meta was up like 30% especially and obviously they're mostly an ads business, which is also insane. Both of their stock prices though went in different directions. Google's stock price went up 10%. I think it was the single biggest day market cap gain ever in history for any company. And they are close right now to overtaking NVIDIA as the biggest market cap in the world, which is no one saw that coming a year or two ago. And then Meta went the opposite way. Meta went down 10% in terms of market cap. And a lot of it is because their AI infrastructure and compute costs and their investments in AI are just skyrocketing. Their CapEx is skyrocketing. Google's is skyrocketing too, but not to the degree that Meta's is. And people are a little bit more confident in Google's investments in AI because they are becoming an infrastructure company. They are selling chips. They are selling Google Cloud, whereas Meta is selling advertising. Anyways, I circle back. New York Times did this big expose, a couple of other nuggets from it. AI-driven ads went from $1 billion in revenue generated in 2022 to $35 billion generated last year and $56 billion generated or will in 2026. I have some questions about that those stats. I don't know where they're coming from.
Do we know if the article defines what AI-based ads are?
That was my question too. Is what is an AI-driven ad? Because that could mean a lot. But those numbers were super interesting in their own way.
Up and to the right.
Yeah, and I wonder too. It's like, listen, guys, we've been doing machine learning since 2005, and so are those ads? Are those AI-driven ads? Are you counting those? Are you not? I don't know. I had AI summarize the article for me, so who knows? And then customers reported saving 30% on campaign costs and 65% on content creation. And apparently, per the article, a lot of the savings are being reinvested in working media, which I think is really interesting and important. And so I'll shut up for a second. I want to hear your takes. David, let's start with you.
Yeah.
Any initial thoughts on this?
Yeah. Well, first, I thought, I mean, a few things. One, I thought the characterization of now we've gone from ads being boring to exciting now because of AI is sort of funny, because it's also coming on the heels of a couple of, we're a few months removed from at least one Super Bowl ad that just got absolutely trashed because it was created via AI. And like, okay, so there is a little dichotomy there. And the other irony in this is, the New York Times is and has always to a large degree been, partly subscription driven, partly ad driven. A lot of the ad revenue, as I understand it, games related. So I don't know which part of that was boring as well, but that AI is fixing, but there it is. Anyway, but AI driven ads, and there's no question AI is bringing some different directions and opportunities to the ads business, whether it's workflow improvements, whether it's better targeting, whether it's putting more towards working media because of efficiencies along. All of that is interesting, and the ability to do some unique and different things creatively. I'll buy the big story that AI is making it better. Whether it was ever boring and now exciting, maybe that overstates it. But certainly on the Google and Meta pieces, though, huge stories from their earnings, the CapEx on Meta. I think you nailed it, Shiv. The question of, can you drive that much value from that much CapEx spending if your primary business is just ads versus being a hyperscaler with the whole infrastructure play around it, like Google, like Amazon as well, that's a different story. So that remains to be seen. I actually am still pretty bullish on Meta, as even with the stock price down, maybe buying. Done.
Myles, what do you think?
Yeah, I think I have to, my thoughts all have to come from a place of like ignoring the ads were boring part, which is just this, it becomes this
That's
total red
fine.
herring of like, what, I don't get it. I don't get it. But if you set that aside, it's like, yeah, absolutely AI makes advertising like freshly exciting, after, the boring thing, it kind of begs like, well, what are we comparing it to? It kind of,
Yeah.
it implies that nothing's been going on in advertising for the last, whatever, 10 years, which is really untrue. I mean, there's been a lot of areas of the business that have been, I guess, kind of just going through the motions for a long time. But at the same time, you've had like the rise of streaming media, it's the rise of
Yeah.
creator media. Like, I'm like, it's been really exciting and fun for a long time. But yeah, AI makes it freshly exciting, like all over again, because we have this like whole new canvas and palette of tools to work with, of, I don't know, not to make it sound academic, but like the types of interactions that people can have with ads or with sponsored media or with sponsored content or with brand content or brand assets or even
Mhm.
brand products. Um, yeah, I mean, I agree. It is really exciting. I just don't get the boring part. That's the
I didn't get the point. It went from exciting to exciting. Here's
Admittedly,
the
it's
thing.
right.
this is three guys talking who have been in this for all this. So of course, we don't think it's boring. I don't know.
It's for the normies, guys. New York Times article about digital advertising. It's for the normies. It's fine. Hey, if you can get a bunch of millions and millions of people to care for once, great. It's great.
Right.
I have a few quick thoughts. My takeaways were like, I think, this is not mind blowing or earth shattering, but it's like, hey, with every new trend or every new thing that happens, the walled gardens turn it into a huge tailwind for their business. And so it's just kind of like, yes, it's exciting. Yes, AI is doing all these things, but I thought it was also ironic that they're like, the excitement was squarely focused on how much Meta and Google are growing, which, like, to all of us in the space is the not exciting part of AI. It's actually like, hey, we wish AI could actually help folks disrupt those companies. And ironically, it's actually just more of a tailwind for their business.
Well,
I,
that kind of gets into the like what's the definition of exciting? Is like I think one of the definitions of exciting is that I've been saying this for a long time, that like the companies that are, going to disrupt the big agency holdcos, that are going to disrupt the big like walled gardens and media platforms, those companies have probably already been founded and are like growing right now, or whatever the big unlock with consumer AI ends up being that we're all kind of still waiting for. I wouldn't be surprised if that company's already been founded and is steadily growing under the radar. And
Yep.
that's one of the really exciting
Yeah.
parts. It's like it's not the incumbents. I mean, it is exciting for them. They're printing cash off of this right now, but like, wow, like whatever's going to replace them is probably already out there, and we're going to see it in the next couple of years. And like the
Yeah.
competitive landscape is just going to get insane.
Yeah.
And
I think the other thing that's interesting is all the savings, right? Them talking about the savings in the article of like, oh, we're saving 60% on content creation, 30% on campaign creation, and then we're reinvesting some of it in working media. That to me is fascinating because like I think that should be a good thing for the industry, right? Where it's like, okay, well, all this like manual work now is turning into more working media. That maybe that's better for publishers, maybe that's better for
Yeah.
like tech providers and companies that are actually providing real value now that we have AI. It also again goes back to like, well, it seems like all the value is just being reallocated to Meta and Google, which is that's not the initial kind of returns on that aren't great. I do wonder if you play it out of just like, if I'm a marketer, right, and I'm like, I slashed all these costs by 30%, I'm not giving my budget back to my CFO. Where am I putting the money?
Right.
I'm putting it into more working media. I also wonder like what that means for the consumer experience. Like, do you want to be flooding the market with more media? Is that actually the right reallocation of capital if you're saving all this money on AI? It just brings up all sorts of interesting questions about where money flows
Yeah.
in a new kind of AI world with all the savings. Yeah. Anyways, any quick final thoughts on this one before we move to the next story?
Yeah, one quick thought I do have is that while the focus, the article, to your point about it being for normies, is the focus is on probably some of the walled gardens and their the benefits they've seen. A normie probably doesn't care about some of the advantages that other parts of the ecosystem have seen from AI along the way too. And I have a feeling a lot of the AI benefits are going to redound to some different facets of the open internet, whether it's buying platforms, SSPs, targeters, measurement cut. Like there's going to be a lot of benefit there, as well as obviously well, maybe not obviously, but I think so, redound ultimately to the marketers as well who are putting money there. So while the article went heavy on some of the walled garden players, I have a feeling that there will be benefits elsewhere as well. I'm part of that.
Well, this is why we have you on, David. You're the optimist. You're the guy from the South with optimism. And so thank you for that. We need that. Okay, let's go to the next story, which is it's kind of like a amalgamation of several stories, which is a lot of with AI becoming so powerful, what we're seeing is a lot of companies are starting to enable the AI to work in their platform. Right. And so, a couple of examples just from this past week, a company called Taboola, which runs ads across the open web. They enabled Claude skills. So like they enabled marketers to use Claude and build Claude like Claude skills around activating campaigns in Taboola without ever going into Taboola, right? And also, and more important than Taboola, Meta is opening up access to via API to Meta's ads manager, to Claude, to OpenAI, to other LLMs, so people never have to log into a Meta interface to run their ads. They can do it natively through like an LLM, right? And so a few examples: Taboola, Meta. This all happened in the past week. And then the other direction is interesting too. So like Claude announced something called just like Claude for creative work, which enables people to use Claude's models and maybe other Claude functionality that I'm not aware of natively in specific design tools, right? So if I'm a user of Adobe Creative Cloud or Blender or Ableton, you will now be able to go into those platforms and use Claude to build, right? Whether it's prototyping or like, brainstorming or what have you. And so I just find it fascinating that like we're seeing, one of my hypotheses with AI is like everyone wants to be everything now because AI just is the great enabler of building tech. Every company is making a run at being kind of everything, but we're also seeing like the next kind of thing there is like everyone wants to integrate with everything. And that's just, I don't know. I don't quite know what to make of it all, but I find it fascinating. So maybe you guys can help me. Myles, can you start on this? What do you think?
As you were describing all of these integrations, I mean, let's just stick to ad tools because it's the
Yeah.
market that the three of us know. Is, I was thinking back to like, I don't know, the late 2000s into the mid 2010s, let's say, and I had a lot of exposures to this segment of the ad tech market, being whatever, a small indie ad tech builder myself. Is everybody and their brother was plugging into various APIs and building their own, at least in a lot of the companies I was exposed to, building their own SMB, for instance, like ad buying platforms. Like they were just like launching left and right. Everybody thought, the hypothesis at the time was there was this big unlock that you could plug into these APIs, white label an interface on top of it, throw, whatever, another 20, 30, 40, 50, 100% on the fees because you're chasing all this dumb money. And that was the hypothesis. And there was like a million companies chasing that, partly because of this new opportunity that you could integrate via APIs, which created this white labeling opportunity. And these cycles sometimes just take a minute to play themselves out. It's like, all right, so you can chat with the tool now. That's kind of the new API, even though the chat may be actually using the API, the LLM may be using the API, et cetera, et cetera. It just becomes this fresh way to kind of like access these platforms in a new way. But you always just end up running into these like, distribution problems, these like scale kind of challenges that these new interaction methods don't necessarily solve. I'm not pouring water on the fact that people are going to be chatting with software now going forward. I'm just thinking about these where we've been through these little gold rushes before, where you can build middleware now on top of this other software, and how that's going to play out. I am sure there's going to be an explosion of little startups around
Yep.
this.
David, what do you think?
Yeah, it's funny. There are parts of it I agree with Myles that are pretty reminiscent of some cycles we've seen before. I do, I know. I mean, we'll talk later about some of the distillery's capabilities, but part of what we've seen companies trying to do, ourselves included, is if we can use some of the AI and particularly agentic AI capabilities to keep someone from having to log into yet a different platform and still enable the functionality of a distillery, of a, you name it, to get into and create functionality in an adjacent platform and a different and it skips steps. Great stuff. Some of the stuff that we've previously seen where it took a lot of coding through APIs can be done a lot easier through like an MCP protocol, something like that. And so I think some of this will gain footing and take hold if it minimizes the steps that people have to go through and minimizes the sort of coding and development time. If it's just building on top of stuff that they've already had to invest in, maybe not as exciting ultimately too. But some of what was described looked pretty interesting.
Yeah, and I think like, to your point, David, is AI the great kind of equalizer in a way, right? Is AI the impetus for like, hey, you don't need all the software. You don't, and frankly, like having a wall around your, I guess, sorry for lack of a better term, garden, is it's no longer a business strategy that works, right? Because the expectation from users and buyers and folks that actually like use products, these technology products, is I should be able to do everything everywhere, right? And I shouldn't have to run into these walls. And if you're putting up a wall, you're hard to work with, and that's no longer the expectation, right? And so that's interesting. I also wonder, like, it's interesting to see who is going to own the AI layer. I feel like I bring this up on the podcast all the time. It's like, who's going to own the AI layer and why? And again, I think everyone's rushing to do it, right? I'm Snowflake and I do all the AI things that you could ever need, marketer. I'm Salesforce. I have Agentforce and it does all the things you could ever need. You cannot imagine how many people I talked to at Possible, and they were like, I have built agents for all the marketing things you could ever need. And every time I hear that, I'm like, cool. That's interesting. But so is and that's what I'm saying. Like, everyone wants to own the AI kind of like the first layer where the work starts and maybe even where the work ends in the future. And it's just going to be so interesting. And like, we're moving there very fast, I think. I just think like there's so much of it. It's confusing and overwhelming. We're not going to get there tomorrow, but AI is just like the great equalizer, the great enabler, maybe the great, bring down the walls technology of our kind of generation. So I don't know. We'll see.
Well,
We'll see where it all
Shiv,
ends up. Yeah.
that's kind of what got me thinking about like I said, late 2000s into the
Mm-hmm.
2010s with APIs were supposed to be also that. There was
Sure.
everybody had an API, and an API was going to just utterly democratize
Right. That's the
the
word.
industry, and
Yep.
anybody could build anything for any use case at any scale. So I just I'm not trying not to be too skeptical. It's more just kind of like, is this going to be a similar cycle? David, I have a specific question for you with
Mm-hmm.
respect to Distillery, or just the fact that you're very close to the, whatever, independent third-party ad tech ecosystem.
Yeah.
Is either Distillery or other companies that you talk to, are they seeing a new wave of kind of, you might call them in other sectors of software, value-added resellers who are building something in an LLM that might pull a product or whatever targeting capability from Distillery and pay Distillery, and so there's fees coming back to Distillery. This value-added reseller is adding some fees on top of it because they've curated something that works really nicely for a particular use case, and they're doing it all now with LLMs versus 10 or 15 years ago, the hot thing to do was to do it with APIs. Like, are we seeing like new entrants start to come in and do that?
Combination of, the answer is yes. Combination of new entrants as well as existing companies retooling to try to make it easier using those newer capabilities. So, we're doing some work with LiveRamp right now that previously would have been almost entirely API driven, and more
Mm-hmm.
and more we see that we're going to be able to do it more easily and efficiently on both sides via MCP. Same thing with a whole host of other platforms, and then some newer entrants who may be native in the AI space who are doing the same thing, where it would have been done a different way a very short time ago that would have taken a very short time ago, but it would have taken a long time to do it. Now,
Yeah.
So the short answer to your question, yes, we are seeing new entrants and existing entrants doing it a different way.
Do they
I
have
want.
do they have as dumb names as the 2010s ad tech companies? Please tell me
Uh,
yes, they have dumb
there's,
names.
yes, there are some names. Oh,
You gonna name names?
dumb names take different forms too, though. It can be, I mean, I have yet to see somebody try to come out and say we're pets.com, socks.com, whatever some of the funky ones were. I'm old enough to remember some of the crazy ones during a couple of the earlier eras, but they take on different sort of fantastical sounding names.
Oh, wonderful.
I wonder.
I'm not naming names because I'm going to end up wanting to partner with them one time too.
Can't name dumb names. I wonder which companies make money off APIs. They're gonna like those companies are probably in for a rough go. I bet there's companies. Anyways, okay, I'm gonna keep moving. I actually had one more last thing to say on this. I do think like as AI becomes the great equalizer, I think the companies that actually have something valuable are going to rise. The cream will rise to the top, right? Companies have real valuable data assets, something really actually valuable and tangible to give to a marketer. That isn't just, hey, we have a cool UI. We have cool buttons, like
Wrap around an
workflows.
LLM. That's not enough. Yeah, it's got
exactly. I also, if I was a betting man, it seems like this is where we're headed. None of the companies I mentioned, whether it's Salesforce or Snowflake or Yahoo or anybody, maybe those companies obviously they all will have a place and a value. But I do if I was a betting man, I would bet that the first place people go to start their marketing is Claude. That's where it's headed. Even Trade Desk, I think a few weeks ago or a month or two ago, announced that you can now build campaigns in Claude without ever entering the Trade Desk's UI, right? So anyways, let's move to the last story of the week, which is OpenAI. Well, we could hit on this quick, but I think this is important and interesting. OpenAI is now pushing really hard on its ChatGPT Go tier, which is $8 a month, versus its ChatGPT Plus plan, which is $20 a month. Right now, Plus has a lot more users, over $100 million users, or over 100 million users, and Go just has a few, but Go is growing and Plus is declining, and ChatGPT is projecting that they'll kind of flip, right? Where Go will be the big kind of the big usage tier, right, for the masses, and it'll have over 100 million users, and Plus will decline. Now, the key part of the story is Plus doesn't have ads and Go has ads, right? And so very, very much like that Netflix playbook from a year or two ago, where they were like, hey, we're going to, create this new tier that's a little cheaper, or significantly cheaper, but it's going to have ads as a way to kind of like incentivize people to downgrade, right? Because their ARPU, their average revenue per user is higher on a low paid subscription tier with more people and ads, or either ARPU is higher and their revenue is higher, right? So it's a scale thing and an average revenue per user thing. And so interesting, like I know we talk a lot about OpenAI and ChatGPT on this pod. Obviously, we've talked about like ChatGPT needs ads to work in order to fund all the compute that they want in the next several years in order to IPO and have any kind of runway. They've projected themselves they want to be $100 billion ad business by 2030, and so they kind of need this to happen in order to get there. Any quick takes on this, guys?
I'll offer a somewhat tangential prediction. Is
I
like,
love a prediction.
well, it's also I question whether like the consumer marketplace wants to pay a subscription fee to an average person's lifestyle. ChatGPT Go is a bolt-on app. Like that, it is not. So people don't start and end their day in ChatGPT. They don't carry it in their pocket. It doesn't sit in the middle of their living room with all the furniture pointed to it. It's not a console that they game on. Like it's not at the center of anybody's life. And this isn't a knock on ChatGPT or OpenAI. It's just like that's not the place it inhabits in an average consumer's day. And so I've been wondering this for a very long time, like long before LLMs debuted, is that I've always thought that one of the big paths to getting this capability, whatever these AI capabilities are, into people's lives on an everyday basis is going to be through mobile providers. And like that's a place where people are already used to paying extra fees. There's probably other paths in there, but I still wonder like if there's really an appetite right now for like essentially just this utterly parallel
Mm-hmm.
app that you're going to be expected to pay for. It's
I,
then up to you to integrate it into your life, either whether it's via your browser, via desktop app, via mobile app, et cetera, et cetera.
Well, also, I thought you were going a different direction with that, Myles. I thought you were going towards like, I don't think people are comfortable with and want to pay for utility.
I, I
They
think
want to pay for entertainment.
they will pay for utility and entertainment, and that's actually a better way, a shorter way of getting at what I was saying is I think they will pay for this stuff. It's just, does anybody want it as a bolt-on thing to
Mm-hmm.
their lifestyle?
No, it's interesting. David, did you want to add anything
Yeah,
there?
it's funny. I hadn't thought about the Myles point related to, similar to phone, almost like a phone company add-on kind of thing. I hadn't thought of it in those terms, but that's a variant. I have always associated it more closer to streaming services and
Hmm.
willingness to pay for an ads tier, non-ads tier.
Mm-hmm.
And my gut, it kudos to OpenAI for getting people to pay $20 a month. Because
Yeah.
I think to the point you made, Myles, I don't think of it as something that, now admittedly I tend to be cheap, but where even as somebody who uses it a lot for work and to some degree in my personal life on different things, the idea of a discounted tier for ads, yeah, sure, I'll see ads for a discounted tier. And I know other people feel wildly different, but $20 a month feels like a lot relative to what I could get for free doing it some other ways. But I think if you offer people a discount, I could see it, I can see that taking off. And I mean, let's be honest, advertisers are just waiting to be able to jump in full force on this and get it's no different. we talked about going back in time on some other things, but it's no different than when search ads really came to the fore in terms of being able to target based on people's intent and preferences, self-expressed with what they're doing in search, only more granularly here. So yeah, ads, I mean, I think advertisers are going to jump all over it. People who aren't, I know I'm talking a lot on this, but people who, are willing to deal with advertising and recognize that, yeah, maybe it's a, some elements will creep some people out for sure, but the idea of what based on patterns of what someone's asking about on ChatGPT, incredibly powerful. So advertisers will love it. People will get discounts, and then there are going to be people who say, "I don't want any part of that. I'll happily pay $20 to not see that and feel like getting tracked."
I just wonder, the entertainment thing to me is the entertainment versus productivity thing is really interesting. Like, what do I pay for in my personal life for productivity? Not very much. Like maybe
Sure.
my accountant, like, please do my taxes. I'll pay for that. But like, also, Google, like AI has kind of been positioned to consumers as a replacement for search. You've never in your life actually paid for a search product.
That's
right?
a good point. Yeah.
And so it's just, I think that's a really tough needle for these AI companies.
And Gemini is a monster in its own right. Just the free Gemini is,
exactly.
That's probably going back to the first topic. That I think a big part of those Google earnings are that they're, for better or worse, less money to publishers because Gemini is giving great answers already.
Well,
go ahead.
I was just going to say the funny part is you don't even have to go specifically to Gemini. I don't know if I don't know, you guys have started using this hack. Is just type your query into the search bar as a chat-esque question, and it'll just AI generate a just quick chat answer. It's like I basically am getting a little mini LLM.
Yeah, I barely go to Gemini actually when I'm using Google for AI. Like I'm just doing AI mode in the search bar.
Yeah.
The other thing that I think is problematic for these guys generating subscription fees is everyone is getting access to their LLMs through work for free. So why, if I have 3 LLMs at work that my company credit card pays for every month, I mean, this is true for me. Like I'm not paying for freaking Claude to look up like the movie times or like build an itinerary for me. Like I don't know. I think the subscription thing for personal, I think that's why maybe ChatGPT is pushing towards enterprise. But I think this like $8, we're gonna have hundreds of millions of users like on this $8 productivity tool. I think now I'm landing on like, I don't know if that's it, Anyways, let's keep moving.
Yeah. I was just Myles' last point on the telco. Sorry. I thought that was really interesting because that does feel like, subscribe to AT&T and get HBO Max free for 12 months or whatever. It's not impossible to see something like that coming on too, of the ad-free tier. I hadn't thought of it that way, but
if anybody has proven that average consumers, at least in the whatever Western world, are willing to pay insane amounts of money, both on the devices and the monthly subscriptions or, whatever fees, it's mobile phones, smartphones. Like, wow.
Yeah.
Everybody's phone bill is sky high, but why? It's a super useful thing. You literally cannot live without that thing anymore.
Yeah, 100%. Okay, let's transition. Good segue. So we're going to go into our lightning round section. Good transition. Let's just stick with ads in LLMs and in AI for a second. There were a few announcements this past week. One was from Snap. They launched conversational ads. So it's something called like AI sponsored snaps where you can like chat with a brand in Snapchat. Ironically, like the brand they launched with was Experian. Like, can you think of a less sexy brand to launch your like conversational chat ad product with than Experian? Sorry, Experian people, if you're listening, not the best launch partner in my opinion. Anyways, they launched that. A company called Dapier, which I think is a really cool company, actually doing some really cool stuff, kind of enabling publishers to fight back against the big LLMs by integrating AI capabilities into what they offer. Dapier launched conversational ads within the AI chatbots of publishers' sites. And listen, like we're seeing more and more of this. We saw a partnership between Smartly and OpenAI. We talked about on the pod a few weeks ago where OpenAI at some point is going to introduce conversational ads as opposed to just static ads. And, my gut instinct on all of this makes a lot of sense, right? Like any kind of ad typically works better when it's native to the environment that it's in. That's why Facebook feed ads work really well and Instagram ads work and Snapchat ads are on and on and on, right? So what is AI? It's conversational. And so the ad should be conversational. That's what users are there to do. And that's how they're there to interact. Obviously it has to be done right. But, we're seeing more and more and more of this. I think it's early days. Obviously it's going to have to like be done right. But I think it's exciting. I think it's good for the ad formats to be reimagined with AI as kind of like that new environment or that context. And so more and more is coming everywhere. Yeah.
Shiv, like, you really got me thinking about the Experian thing, because my initial reaction, was the same as yours. Like, it's dull as dishwater. Like, that's really boring. But then I'm like, well, if I'm a person who is cares about my credit score for whatever reason, and other data and factors that are kind of attached to Experian, that's high stakes stuff. Like, if I care about that stuff, I'm trying to finance a purchase. I'm trying to rebuild my credit. I'm trying to, plan the next 12 to 24 months of my life. I'm applying for a credit card. I'm trying to figure out which credit cards. Like, I actually, and credit ratings and everything, that entire universe of whatever products, services, measurement is really opaque to people. I certainly don't understand it. And so it's like, it actually seems quite ripe for a conversational interface, because it is something that you might want to like deeply consult with, that you don't have the opportunity to deeply consult with a human on it. You might want to deeply consult via chat. And then clearly, because you care about your credit, there's some pot of gold at the end of that rainbow. There's something you want. And so then a sticker. Then you have the opportunity for whatever sponsored listings, ads, special credit products, et cetera, that are kind of like at the end of whatever this chat journey might be. But I think that we're going to have a lot of these aha moments where maybe things seem mundane on the surface because it was never possible to kind of connect somebody into the guts of their credit score before. I mean, credit rating companies have tried. They've been forced to, I think, in various respects as well. But nobody's really been able to do that. And now people can do it, anyway, I'm sorry, you said it was via Snap?
Yeah.
Yeah, and so I'm also thinking about younger consumers, like, who are concerned with their credit. And so I'm like, yeah, that actually seems like potentially a very engaged audience. So anyway, I want not to push back on what you're saying.
People want to do that in Snap, though, is the one thing. Like, the idea of everything you describe feels, I agree with you. And then I'm like, but if somebody's in Snap at that moment, is that what they want to? That's the part.
We're too old. We're too old for that.
I am. You're 100% right that I'm about, in many ways, the wrong demographic to try to assess, but that just feels outside the path. But you're probably right that I'm should not be the one speaking to it.
All right, let's go to the next story, guys. So China is breaking up the Meta Manus acquisition. So this was a few $1 billion Meta paid a couple months back. They did everything. The deal closed. They paid the investors. They paid the founders. They started integrating Manus into Meta's workflows. I think we've talked multiple times on the podcast and in the newsletter about how Manus is being integrated into Meta's various offerings, especially on the ad side. And now China swoops in and says, nope, we think this is like a national security risk. Just for some context, Manus was founded in China originally, but then the founders moved it to Singapore to avoid any issues like this. And then China still was able to swoop in and say, nope, reverse the acquisition. And so it's happening. It's getting broken up. And I think that hurts, Facebook's Meta's kind of like agentic AI roadmap. Cause I think they had a lot of eggs in that Manus basket. And they're kind of starting from scratch. And it's just going to be interesting. Like, I don't know how deep they got into the tech integrations, but they're going to have to untangle that. That may have some impact on marketers that were using those Manus agents, et cetera. So that happened. Next thing that happened, last but not least, the last story, and then let's get into you, David. Google invested another $40 billion into Anthropic. The numbers are just getting wilder every week. And then I think Amazon put in another $20 billion. And I think they're raising now at basically $900 billion plus. which is more than, I believe, OpenAI's most recent fundraise, which is at 800 billion and change. These are just numbers I throw around casually all the time because, like I've got money like that lying around. Yeah, crazy money. I think the kind of interesting take with Google putting $40 billion into Anthropic is, I think I coined this term on a recent podcast. There's like a 3-headed AI monster right now. It's Gemini, Google, Anthropic, Claude, and ChatGPT, OpenAI. And it's fascinating to see one of the heads investing so aggressively in one of the other heads. It's a hedge in a way, right? It's just like a masterful hedge, perhaps. This happens every week. I feel like next week we're going to be talking about some other billions and billions of dollars of investment in one of these companies. Let's keep moving. So let's move to your work, David. We want to hear a little bit more about kind of Distillery. So you told us a little bit about what Distillery does. You're a data company. You provide, data for targeting purposes to advertisers. First of all, we want to hear about how you're introducing AI into the work that you do and into the products that you give to your customers who are marketers. And then we want to hear a little bit more about how that's all going, right? How it's playing out. Like, you took a swing at it. What's working, what's not working, where are you seeing like the value kind of pop? And we can go from there. But let's start at the high level.
Yeah. So Distillery, as you noted, we're a targeting company, and Distillery's got a funny heritage in the sense that at one point an ad network evolved into, and I'm going to skip a few steps even, evolved into a DSP where we had a bidder, but come to 2017, 18-ish, we recognized really the core strength of the company was on the data science side and creating what we were enabling at that time in our bidder for people to do targeting. And we chose to retire the bidder and really focus aggressively on the targeting components. So I was seeing this, by the way, on the other side at the time where I was at the trade desk running the data partnerships area and saw a Distillery, as they focused on this, put segments in the marketplace that immediately rose, to the top levels of relevance scoring. They were doing exceptionally well, which was sort of a measure of efficacy. So Distillery was early on an adopter of heavy machine learning and data science for the creation of targeting. Fast forward to call it the current iteration of artificial intelligence, and we're really applying it in a couple of different ways. The first is in the building of the targeting capabilities. And for that, we use what's called multimodal AI. And that's not a term that you see out there a lot, but the idea of being able to take any kinds of inputs, whether it's a first party seed, whether it's search terminology, whether it's web page visitation, all these different sort of inputs that can come into the flow and then apply towards any kinds of outputs. So we output in the form of audience segments, both off the shelf and custom, can be curation, the form of helping SSPs curate along the way, can be in the form of custom bidding algorithms as well. So multimodal AI is one way we use it. And then the other way, not to put you, not to go too long, is but agentic AI, which is where we're exposing it through an interface called DS1 or a tool called DS1, which can be a Slack chat, can be in Microsoft Teams embedded, but it's a way to where clients can surface existing targeting segments. They can also create new ones, do custom modeling in it. They can do planning and then ultimately activate. So just in a chat, say, activate these segments to the trade desk, create this as a deal ID and index, and off it's running. So we've seen great success with that already, both in terms of partners on the platform and supply sides, and actually fellow data partners wanting to integrate with it in different fronts. But more importantly, with some of our agency clients actually lighting up campaigns using that as their primary methodology, both for the targeting and then signaling for activation as well.
That's awesome. I guess one thing I have, you guys gave us a demo at some point, and one thing I actually loved about your demo was it goes back to what we were talking about earlier, is like, it doesn't feel like you're trying to be everything to every marketer with your AI tools. You're trying to solve a very specific use case. Do you find, first of all, do you agree with that? And second of all, do you find that that's helpful when you're talking about your AI products, or does it help you or does it hurt you? Right? Because like I see I think part of the reason a lot of these companies are running at, hey, our AI does everything, marketing orchestration, activation, like we're everything to everybody now. Part of the reason they're running at that is because they want to do the land grab, but then also that's impressive to marketers. And some marketers are like, I would love that. And, I don't know, like, what's the reaction, I guess, when
Yeah.
like, yeah, how are those discussions going with partners? How do the pitches sound?
Yeah, it's a great question. And I think we benefit by focusing on the thing we do well, which is enabling the targeting. There are some fantastic companies out there doing a lot of the other parts of that value chain that we don't want to replace. We couldn't replace if we wanted to, but the parts that we can do exceptionally well are the targeting in terms of choosing what it is and helping clients figure out what they can do very quickly and effectively. And then from a workflow standpoint, just making it easy for it to happen in conjunction with the other parts of the system. So the, you know, in terms of the efficiency gains, a couple of points that I would hit on. One is, you know, there are, I think, 150 companies in some of the large segment marketplaces and different platforms. Finding the right coffee drinker segment in anyone, like, who knows what you're picking? You're typing in a keyword, you're guessing, you're trying to figure out
Yep.
which of the 73 you're choosing from are the best. Why not create a custom segment based on whatever seeds you've got available, or choose seeds quickly? You're going to get a better outcome from that. And we've seen that, statistically, you're going to get a better outcome. And if you can activate that and do all that in a span of 5 to 10 to 15 minutes, as opposed to 2 days of back and forth emails of, can you refine it this way? Can
Yeah.
you do this? How about you build it this way? If we can simplify the workflow and deliver better outcomes, that's a win for us. And it's a win for the partners on both the upstream and the downstream side of it, because it's better use of their time, more time for campaigns to be in market, and
Yeah.
better outcomes.
David, I want to ask you about like this hypothetical coffee drinker segment. I really like that, by the way.
Yeah.
Um, like, are you seeing, so like clearly AI is changing how workflows happen, between Distillery and your users, your customers. But then on the other side of things, you talked about multimodal AI. Are you seeing any interesting new patterns or innovations with AI affecting how that coffee drinker segment gets defined? Because whatever, in
Yeah,
a really basic use case, you could have a search defined one, or just a keyword defined one. There's really blunt force, very simplistic binary
sure.
type of thing. We don't need to do it that way anymore because we have these machines that can understand what a coffee drinker cares about and how they start and end their day and blah, 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 blah. So A, is it changing that? And then B, I realize you don't have like encyclopedic knowledge of the Distillery product. I'm also just curious if you're seeing that play out in your partner ecosystem as well.
Yeah. Yeah. Well, first, I'm wildly insulted that you don't think I have encyclopedic
Yeah.
knowledge of the distillery product.
I don't want to put you on the spot too much.
That cut deep, Myles, and I don't know that I'm going to recover on that. But yeah, no. So it has changed things, and because the start with the simple coffee drinker segment. I mean, that encompasses all kinds of things. That's coffee aficionados that want the best equipment. And so they're on coffee pages all the time. But one of the things that it's changed is, if you're doing a search in DS1 and doing, we break it down in different personas. These are enthusiasts. These are aficionados who like different types of equipment. These are people who are in market for equipment. These are people who are frequent Starbucks. So different personas where you can say, hey, I want to focus on these types, not on these types. So suddenly, instead of being dealt the hand that the off-the-shelf segments deal with, you can really sort of customize down, and you can bring to bear whatever you've got in hand, because Starbucks is certainly going to have more first party data in hand to break that down than somebody who has nothing to start with. And we give them lots of choices as far as what someone can do with it. And then for partners, what they see is I'll call it an instant custom segment, is going to be a lot better for them. It's less work because you don't have to keep this giant, enormous marketplace of segments that's there, versus just being able to do things instant. And so in terms of who we've seen kind of loving this sort of thing or embracing the philosophy too. Keith Petrie from Viant, I think, wrote a great article recently, not about our stuff specifically, but about the idea of sort of rethinking the way targeting and flows should go and what you work with. So, I think Viant philosophically embraces this concept, and you've seen that. Keynes is one of our great partners that has been putting this to use, Tatari as well, where they're using it to greatly compress the workflows while simultaneously getting better information out for their targeting purposes as well. And then on the buying platforms themselves, the ones that are really thinking about how can we make it easier for people to create intelligent targeting versus just throwing a blitz of stuff out there, or having stuff where it explicitly favors our own things, which might be the best, but give them the tools to make better decisions. We're seeing benefits on all those sides.
Yeah, that's awesome. Yeah, and I almost wonder, it's like, and also we were talking about this earlier in the pod of just like all the context now that's going to come out of LLMs is going to just create a paradigm shift in how audiences are probably created, right? Like the context windows and the richness of like the history. It's just going to like, I think the lookalike audience is dead probably in the next year or two, right? Why are we making lookalikes? Like, that doesn't make any sense anymore when you have an AI tool to basically like get into every nook and cranny of who somebody is and be able to kind of predict who they're going to be or what they're going to do, So,
I mean, if you've got a great thing to start with, lookalike is beautiful. But if you're just throwing everything you can in the dictionary that to just try to build around it, no good.
Yeah.
I'm with you.
Agreed. Okay, that's all the time we have for today. Thank you for a great episode, David. Thanks for being our guest. Myles, thanks for being here as always. Quick reminder to the listeners, we have our AI accelerator. It's actually really close now. I think it's launching on the 12th. So we still have some seats left. Buy a ticket, bring your friends, bring your colleagues. A great way to kind of jumpstart your AI knowledge, especially as it pertains to marketing and advertising. Our friends at High Touch are sponsoring. They actually just raised $150 million at a $2.75 billion valuation, which is just incredible. Like, they have skyrocketed in the last, I think I remember being really excited about them being valued at $1 billion like 3 days ago or something. So we're really excited that they're on board as a sponsor. They're going to be doing some teaching about their new ad studio product in the AI accelerator. So thanks to them. Thanks to you listeners, and we'll see you again next week for another episode.